I'm going to show you two types of fair value gaps in the market, and maybe this is why you are losing money in trading. So this video is for you, so it could help you to stop losing money in trading. So let's dive into. So we have two types of fair value gap. So how does a fair value gap occur? So how does it occur? It occurs after impulsive moves. So the first candle is appearing like this. So let's talk about the first candle appearing like this in this zone. So we are seeing the first candle appearing like this. Now we are seeing the second candle appearing like this. So you are saying that maybe at some point this candle leaves a gap, and these gaps are almost formed during the market opening, or maybe during the new session. Okay, we could see around this thing around here. So we could see around this thing here. So this is a gap. So we are seeing the fair value gap around here. Then we are also seeing around this. So we are also seeing about this. Now, where did the gap occur? So the gap occurred at around this point. So the fair value gap occurred within this zone. So this zone you are seeing here, so this is a fair, so this is a fair value gap. Okay, let us write it in. This is a fair value gap. So this is a bullish fair value gap. This one is a bullish fair. This is a bullish fair value gap. So we could also write it in short form, as you can see. So it is a bullish fair value gap, guys. So we are also going to see now this is a bullish fair value gap. So how does a bearish fair value gap form? Remember, a bullish fair value gap forms after in a downtrend market. Maybe the market was trending down. We could see the market was trending this down. Now when the market reached here, it reacted off, forming an impulsive move. Maybe the market overtook. Okay, you could see it retracing like this, and at every point we could see prices running up fast like this. So this is how you could analyze the market. Now let us also look at the second one is bearish fair value gap. So how does a bearish fair value gap form? So we could see that it will form after a bullish trend. Now let us see. So these candles, the candles are moving like this. So when prices are moving very, very fast, we are seeing that the market is going to leave gaps in the market. Okay, so prices will leave gaps behind. So the gap is going to be very big, and fair value gap are always seen every day in the market. So they are always seen every day in the market. So let us have this candle here. So these gaps cause inefficiency in the market, or imbalances, or an volume. So the volume is not filled. So unfilled volume, that is inefficient. So you are seeing this. So this is what. So let's change this color now. Maybe these candles are dropping down. I will change them to green. Okay, so these are now bearish fair value gaps. Now you could ask yourself, so you could see them. These are bearish ones. Okay, these are bearish one. So I will also drop this. So these are bearish fair value gap. So this zone only is called a bearish. This is a bearish now, bearish fair value gap. So bearish fair value gap. So the bearish fair value gap is being formed. And how does it form? We shall say that maybe the market, after shooting up like this, the market reacted off. Okay, you are seeing the market reacting off, then coming back. Yeah, now at the candle close and opening, the candle opens exactly. You began to now just look at it. So this is the body of the candle. Now closing, we are seeing another candle opens, but it opens behind it. So we could see this sort of candles in the market. So this is how fair value gap are being formed. Okay guys, so you are seeing it on the chart there. That's the fair value gap. So we have a bearish fair value gap and we have a bullish fair value gap. So the bearish fair value gap, you've seen it there. So I've shown it how these candles really move to form the bearish fair value gap. Now you've seen them there, you could see them around here now. So you are seeing them now. Let's go to the real chart example and I show you in the candlesticks. Now let me take you through here. Now here around this point here. So if we try to look around this, so this is, so let us identify the bullish fair value gap. So this is a bullish fair value gap was formed around here. This is a bullish fair value gap. Okay, in fact in the higher time frame, this fair value gap, they rarely happen in the market. Okay, yes, they rarely happen in the market, but in the minor time frames we could see them forming over and over again. So they usually happen in the market, and more so in the micro time frames fair value gaps happens often. But the difference is that those gaps, they are invalid, because fair value gaps work most in the higher time frame. Okay, so maybe if you want to enter the fair value gap, maybe your last entry should be 15-minute time frame. Okay, let's look at this gap. So the market left a gap here. Now this gap, this is a fair value gap and it was respected. So this is a bearish fair value gap respected for more entries. Okay, you could see it here. Let us play it out. Okay, let us say that maybe the market was reacting in a downtrend. The market reacted in a downtrend. Okay, let's say that the market was reacting in a downtrend. Let's take a good example of this fair value gap. Let's say now we are going to reduce our speed to 1. Okay, let's play this price. So we want to see how do we enter in a bearish fair value gap. So we enter when we first mark our zones. When price comes back and we get a confirmation, then we could say, now let's pause a bit. Now prices, when they are moving, prices, they left a big fair value gap around this zone and you could see them here. Okay, let's enlarge these candles. Okay, you could see them here. So this is a fair value gap zone. So this is a bearish fair value gap, guys. So you could see them that these are bearish candles. So these candles are moving back. So this is a strong fair value gap. And if we want to check the strength, so this gap is bigger than this one. So this is what we are seeing now as current on. So in case prices respect this, then we shall also have to put our pending sell orders. So this is how institutions trade. So for them, they will just come and put some pending orders around here, then for again to take more trade. So what is the stop loss? So the stop loss is above setting this fair value gap, the last candle which formed the fair value gap. That's where the stop loss is set above that fair value gap above there. Okay, let's have a look on this. So this is our swing. Now we shall target maybe the lowest swing, the nearest swing, or the nearest liquidity point. Then we shall also see it. Now let's play this price again and we could see what are we going to see in a bearish fair value gap. Then what are we going to see? Which kind of patterns form when the market is running like that? Okay, let me pause a bit. So you are seeing that when the market reached this fair value gap, so you are seeing market reaching the fair value gap. So first formed the first rejection. The first rejection is showing that now buyers are rejecting higher prices. What does it mean? Since buyers are rejecting higher prices, it means that sellers are now taking over the market. Buyers rejecting higher prices means that buyers are losing control in the market. So that's the first indication. So a rejection candle means that so that candle shows that buyers rejecting higher prices, and also sellers are starting to gain momentum in the market. So what does this signal indicate? It indicates for future sales. Why is it indicating for future sales? Because this is a bearish fair value gap. So as we are in a bearish fair value gap, what do we expect to see? So we could see some sort of pattern like this. We have to see maybe a valid change of market structure. Maybe, okay, this is our swing now, this is our high. Now we want to see some sort of thing like this. If this swing is not respected, and we shall see a failure swing high. So if price fail to break this, that's called a failure swing high. Then maybe we have to see prices disrespecting this. If this one is disrespected, then we could confirm that the fair value gap is invalid. So the fair value gap will be invalid if confirmation is allowed. So let's say price is coming, dropping like this, forming a change of character, maybe a breaker block forming, plus its entries down here. Okay, let's have and play the price, and we could see how it was playing the price. So let's play this candle and we see. So you are seeing it. So we are seeing now, let's check now. We are seeing within the fair value gap, now we are seeing some sort of bearish order blocks. You are seeing now. So a fair value gap doesn't work alone. So if you want to trade the fair value gap, then you have to get some other trading confluences. So the fair value gap followed by rejection candles, followed by bearish order block. You are seeing a bearish order block within it. Then what's the indication? Then we have to see a valid change of market structure. So valid change of choke. So we are seeing now here the market now changed at this point. So you could see around it, we are seeing down here at this point the market has turned around this point. So what does it indicate? So there has been a market structure shift to the downward. So what's the point now? So it means that this fair value gap is valid now. What does it indicate? So we are going to look for our sales. So the first entry will be around here. So this is the first entry. Let's take, so the first entry was taken at the top. Now the second entry is going to be taken within the bearish blocks. So the second entry is going to be taken within the bearish blocks, because if you look at this, this is a breaker block. So this is a breaker block. So the second entry is going to be taken within this failed OB zone. So because a breaker block is an opposite of OB zone, so we could see, so this is our second entry here being taken within that failed order block. Okay, let's see how prices were playing out. Okay, so then if you're trading, you have to be watching whatever thing is happening now. Let's have a look at this now and we see. Okay, let's first play it. Let's play this play. So the question is, where is the stop loss going to be placed now at this point? Where will be our stop loss? So our stop loss could be slightly above this rejection block. All right, so let's play now the price. Let's play now. So we could see, what if we play, because this is a daily time frame. Okay, we are seeing some sort of rejections. So just imagine now, after, so this order block has been broken. So we are seeing a breaker block, breaking down, now coming back. So we are seeing mitigation blocks. So the fair value gap has given us 3 conferences. The fair value gap followed by mitigation block, breaker block, swap. So we are now, so what are we going to see now? So we are going to see that our prices are going to be hit down. So our take profit will be now hit to the downward. So this was a clean setup and this was a swing setup, guys. So let's play the price wave. Okay, so you could see now price was respecting now after a breaker block forming. So price respected that zone and started moving to the downward. So you could see it properly. So this was take profit hit. Okay, you could see it, take profit hit. So this was take profit hit, guys. So you can see it clearly on the charts now. You could see it around here. Okay, so you could see. What did you see now? So it means that now this is how you could trade fair value gap profitably. Okay, guys. So as one thing I'm telling that if you want to improve on your trading strategy, so if things are hard for you, please just join my mentorship. You could enhance your trading skills. Then you could trade like an institutional trader. You could trade like a pro, because like along the way you need a trading coach, then you need a mentor. So you could not make it without a mentor, because as I've been telling you that every successful person in the world has got a trading coach. So just take an example of the best people in the world. So the best people in the world have got mentors, have got teachers to train them with that one thing. Yes. Okay, let's have a look. So this was a bearish fair value gap formation and we have seen its entries. So we are going to take an example of a bullish fair value gap and its entries. How will it form? Okay, let's play the price again. Bullish fair value gap, how will it form? We are going to take an example of a bullish fair value gap, guys. Okay, let's take an example of a bullish fair value gap within our time frame around here. So how will the bullish fair value gap form and how could we take the entry? So guys, just keep watching and just see what we are going to do now. Okay, so we are going to look at the right examples, guys, then we could see it. Okay, guys, so let's dive into this and we could see, right? All right, so let's take a good example. So we are going to see the best examples, guys. Then how do institutions trade the market? So we could see around it here. So let's have our take, guys. So the first example was a bearish fair value gap. Now today we are going to see a bullish fair value gap, guys. So let's go back now and we check it, guys. So this is, so you want to improve in your trading skills, the link is in the bio above. You could reach us on WhatsApp. So just tap the link there. You could find me on WhatsApp. Then you could ask me any question about trading. WhatsApp link is in the bio above. Then I could discuss. Then so if you want my mentorship, just for free, very cheap, affordable, $30. Okay, guys, let's go. Now we are seeing you want to trade like a pro. Okay, let's spread the price. Let's assume that this was, let's assume you found the market like this, but you want to take a swing trade. So the first thing, the market is showing is bullish. So we could see that maybe at this point, so this was our resistance zone up here. So we are seeing our resistance zone up here. So this is our resistance zone up. We are seeing the resistance zone up. So what do we expect? That a break. Okay, but just understand that we shall see, we may see even a candle breaking up, running like this. So we could see candles running above it. Okay, let's take a look and we see how was price reacting to that zone. Let's take and we see now. You could see it. You could see it. Now around this zone, now a favorable gap has been formed. How was it formed? If candles are moving very fast, we could see favorable gaps being formed, and now that will be our next point of interest in the near future. So let's take a look. So profitable trading is more of waiting and being patient. All right guys, so let's take a look. So this is a fair, so this zone, so this was our point of interest. So let's take a look around here. So as I've told you, it should come with at least 3 confluences before you enter. Yes, so never enter without at least 3 confluences. So we are saying that this is a bullish, so this is a bullish, this is a bullish favorable gap. So to enter this setup, we have to see 3 confluences. Let's play the price and we see. Okay, price is now ranging up. Price is ranging up. So price is playing. Okay, you could see it up. You could see it up. All right. So price has come back in the zone, but that's not enough. Okay, we could see it up. Okay, we could see up. Okay, so as price is going back, again we are seeing another gap being formed in the market, but we have to see like at least three confluences before we drop now the setup. Okay, let's hope like this. Let's do like this, and we have a sort of like this. Maybe let's play the price again. The price is raining. So at first we have to see market structure shift to the upside, then a breakup block. Okay, let's see now. All right, price now is trying to, so price has respected this zone. All right, so we have to see some bit of formation like this. So we have to see some bit of formation, then we have to see something like this for us to swing our setups. Okay, one thing we are waiting now, we have to, now this is a block now. So within a bullish favorable gap, we are seeing a bullish order block. So a bullish order block has been formed within the gap. So what does it mean? So it means that we are standing in a high probability setup. So what's the high probability setup? We could see that maybe prices may want to come back within the zone, at this point. Okay, so we could try to measure. So let us take a point, try to measure this point. Maybe we could extrapolate around this point, around here. All right, so if you want to hold this setup, maybe our target may be around there. All right, okay, let's see how it's going to play now. Okay, so since the swing setup, so you want to swing, let's see how things were playing. Now within here we are also seeing a breaker block. So a breaker block on the left is here. So around here we are seeing unmitigated breaker block. So we are going to set our, so our stop loss is going to be selected below this. So what are we targeting? So just see the setup. So the setup is risk to reward 3.3, because most of the setups go to 1 to 1, 1 to 2, but this setup is times 3 of your money. It means that times 3 maybe you're risking 1,000 to make 3,000 in one setup. You're risking 100 to make 300. So you're risking because if you see the setup, you are risking less to make. So this is a high risk setup and high probability setup, because most of the high risk setups are also one of the high probability setups. Okay guys, so as I've told you guys, don't forget to like, don't forget to share all this video to your friend, because we are live on YouTube now, because these videos are always there on YouTube. So I'm also going to upload them on my YouTube channel for those of you who want to keep on learning trading step by step, and if you want to improve on your trading style, so you want to improve on the way you're trading, so you could also just go on YouTube, then you subscribe, so you are going to see all the things I've been talking about. So let's see, so let's go. Okay, all right, so let's play. Okay, so price is moving like this. So how did you enter? So let's play this setup. How did the setup form? And okay, let's see, because at some point, if price comes back, because now we are seeing here market structure shift to the upward. Okay, you are seeing, so you are seeing that at some point market came back to test this. Okay, you are seeing it, you are seeing that market came back, you are seeing that market came back to test. Now there are hedges that this count is going to reject it. Why? Because here we have three confluences, we have three, almost three. We have bullish, we have engulfings are also inside, we also have rejection kind of. So let's play the price. So we may see some sort of this like this, we may see something like this to the upside. So now this is the right time to hold buys and to hold buy. So this is the right time to hold buy. Let's first pray like this, and oh, this is it. Okay, so we could see like around here. So we may see that maybe price took out. It means that our stop loss could have been below this zone to hold this trade, but this setup is still valid. So we could see what are we going to see in the near term. Okay, let's play the price. So we are seeing that prices were consolidating around this zone. Okay, so we could see it down here. So price is coming back, within again this zone around here. Okay, so you could see around here. So what are you seeing, guys? What are you seeing? So you could see around here. So setup now moving. So we could see that our take profit is being hit. Okay, guys, so our take profit is being hit, guys. So our take profit is being hit, guys. So alright, guys, so you could see there. So our take profit is being hit, guys. So what are you seeing now? You could see, so take profit is being hit. So what's the point now of you not making money like this? So what's the point now? So take profit is being hit, and as you could see, when price left this zone, it didn't come back. So this is the best example of fair value gap. Then also we are going to take the last example of a bullish fair value gap. So this is the last. We are taking this setup like this. So it's a bullish fair value gap, like this. So what's the point now? Then here we have OB zone. So what's the best point? So the best point is to take the setup within this zone. So this is the best point. Take the setup within the zone. So take profit hit very fast, straight TP hit. So you could see it, guys. So this is how the institutional traders trade. So guys, I think we could stop here for today. So lastly, maybe today we have looked at favorable gaps and how do we trade them. So you could see they are very powerful, guys. So you could see even around here prices came and respected this zone around here. So prices just came and reacted off the price. So you are also seeing it around here. So if we get all the confluences, then we come it up, then we sum them up, so we could find out all the best strategies. So this is how we see. Then around here we are so around here, what are we seeing around also this gap? What are we seeing around this gap around here? So that's the best thing, okay guys. So prices are reacting off that. So wait, okay, so thank you for watching, guys. We could also meet, okay, so price reacting around this zone. Okay, what's the point? All right, guys, so you could see that this is a running market now. Okay, we are done with favorable gap. So in summary, we have looked about, we have talked about bullish favorable gap. Bullish favorable gap, they form like this. Bullish favorable gap, what does it, how do they form? So that's the most important thing. Bullish favorable gap, they form like this. Bullish favorable gap, these are candle formations. All right, so the market moving. So let's do a summary. So this is the summary now. So in summary, this is it. So in summary, this is a bullish favorable gap. All right, so in summary also we have talked about a bearish favorable gap, but this should come with confluences, guys. Okay, what do we mean by confluences? At least 2 or 3 confluences. So I'm going to change the color to I'm going to change. So I'm going to change them. So I'm going to change the color to so this is a bearish. So this is a bearish fair vol gap, guys. This is a bearish fair vol gap. You could see it, bearish. So this is a bearish fair vol gap. So this is a bearish fair vol gap. So in summary, this is a bearish,